I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldanoilguy.com. Welcome back to the show, Chris.
Thanks for having me, Jim.
After the Dow hit the 20,000 mark, we're seeing action in the opposite direction. What's behind that?
Yeah, the equities market has kind of been trading since the second half of December, just in this tight sideways channel. Like the Dow and the S&P 500, they've been consolidating, and they're building up pressure. When the market doesn't really go higher or lower, it just trades sideways in a range. Price is condensing. It's coiling, just like a snake. It's building up energy, and when it breaks out of that range, either way, to the upside or the downside, you get a really strong pop in price. And, that's what we kind of saw when the S&P 500, the Dow, we saw that pop last week. And that was the market kind of jumping, getting out of this range, a lot of short covering kicking in, people playing the breakout to the upside, breakout traders, and it created a quick gap and pop, and the market held up for 3 days. But really, it fizzled right out. And, typically when it fizzles out and dies off, just like we've seen, like 3 days later, here we are back down at the very lower end of that range. It's given back all those gains and is at a point now where it's fairly close to breaking down to the lower side. That's a pretty bearish sign in the short term. And we saw some pretty strong panic selling on Monday of this week here. I follow the NYSE volume ratios, the up and the down volume, and depending what you're looking for, you divide one by the other. And when we have panic selling, like we saw yesterday on Monday, we saw a ratio of 8, meaning there were 8 people or 8 shares being sold to every 1 share being bought. And the NYSE is like the perfect gauge for the big board stocks. All the big brand names that all the mutual funds and average investors are moving in and out of, always buying and selling. So that's like the block of the kind of the investor sentiment. And when everyone is selling, when that ratio is over 3, I consider it to be a short-term oversold market condition. People are running for the door, and it's a contrarian indicator. So when everybody's running one way, you got to start looking, okay, well, we probably need to go the opposite way, because usually the market catches the majority of the people off guard. So yesterday we saw that ratio of 8-to-1, which is a pretty significant level. Usually signifies a intermediate pivot low. But once we have that signal, it usually takes a couple days. It takes about 2 to 3 days for that bottom to kind of get put in place, for the rest of that fear to dissipate, and then for the equities market to rotate and start to rally again. So here we are, day 2. Equities are a little bit lower. We still have the VIX climbing and rising, telling us that there's fear in the market. And investors are kind of just continuing to trickle out and get out of these positions. So I think the market is setting up for another move higher, but we just have to wait for the short-term extreme panic in the market to cleanse itself and for new people to be holding shares at these prices, expecting higher prices, and they're going to hold them, not sell them.
Any sign that we're going to see a January, February drop in prices like we did last year?
There's always that potential. It really depends on how the sell-off kind of takes place and how other things kind of relate to that, like the U.S. dollar, and if there's any type of news event that could add to the fear. Because, like right now we've got fear in the market. It's clearly showing across the board. Money is moving out of equities, out of the transportation index in a big way. It's almost down 2% today. Industrials are down 1.3%. Small caps are down. Money's moving into bonds and metals, the safe haven plays. So when there's fear in the market like we have right now, if we happen to have some type of scary news hit the market, there's going to be more downside. The market right now is really sensitive. It's spooked. And so if we get a series of, fear in the market with one or two bad events and maybe a critical support level broken on some type of index, it creates that big kind of washout low that we could see a big sell-off. So it's always a factor. It all depends on the combination of things that kind of are creating that situation of how severe it could be. And, the market has pushed up, hit the 20,000 mark, sold back down on the Dow. And, right now we got fear in the market, and I still think we're going to have a few more down days of selling. And, ideally, I'd like to see a sharp kind of washout low where we get a gap down, a big sell-off intraday, and then like a strong recovery. That should signify a bottom because we have the early stages of a bottom starting to be formed. People are scared. They're ejecting out of their positions, and that's usually the first sign that we got to start looking for some type of reversal because equities are getting cleansed and they're reloading for another move higher.
Is the White House a big factor? You don't know what's going to happen day to day.
Oh man, is it ever? Yeah, Trump he's off on a tangent doing all kinds of stuff, and you never know what he's going to say, what he's going to do, and it is definitely kind of he's going to trump the market, pardon the pun, more times probably this year than ever. People are trying to get a gauge on how severe and how quickly he's taking action on things. So he's definitely a wild card, and he adds risk to the market. And I think it's one of the reasons, I think we're going to see precious metals hold up fairly well as a safe haven play going forward here, because there's just a lot of unknowns and uncertainty, and he could spark, who knows, a war or whatever it is. He's great at causing controversy.
Yes, and of course, you might have a plan to gold plate the White House.
Oh, for sure, or at least all of his Trump logos on all of his hotels and golf courses.
When you have international uncertainty, what does that do for markets overseas?
Well, it really depends. It depends on the market. I think, China, it definitely adds some, he's talking about all the tariffs and importing and all that stuff. It plays a big role with those countries, big countries that export. And it's it definitely has a role in what their outlook is. China's, what they do over there, all the products they sell could drastically change their GDP and their numbers if Trump decides to change something severe on our side or, the American side for all these taxes. So definitely plays a role that adds risk to those equities markets.
Well, China, of course, has said it wants to change its economy to one of consumerism. Are they big enough and strong enough to do that?
To be honest, I'm not really sure. I don't follow China that closely of what's going on. You look at their stock market. It's had a dramatic drop. It's dropped, 50% since mid 2015. It looks like it's put in some type of a bottoming formation, and it looks like it's building a base. The long-term chart looks good. That doesn't really tell you what the economy is doing. The stock market and the economy are usually a little bit out of sync. But overall, it looks as though a lot of the market has recalibrated over there. The fact that it's dropped over 50% and it's built a very bullish pattern long-term, I think there's great potential for the Chinese large cap stocks to continue to move higher, which means we're probably going to continue to see, lots of exports and products being sold going forward. It's not really, at this point, the chart is not factoring in too much of a Trump issue or some wild card. It looks like it's actually getting ready to go much higher.
We'll have more with Chris Vermeulen right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior. with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Chris Vermeulen. With uncertainty now playing a role, what should a person be getting into? Gold bullion, gold stocks, a mix of both?
I think you should always have a mix. I'm never a fan of being leveraged in any one type of asset, even within an asset class like precious metals. I think you want to own more things than even just gold, silver, and mining stocks. I think you should own all three of those. But, I've recently actually been looking at some other things like diamonds, and you can get all kinds of different precious minerals that, actually hold some value. And, there's an ETF, the GLTR ETF. It holds a basket of platinum and a whole bunch of different metals in there. And you get this nice rounded kind of portfolio. So I think it's important to have all that stuff. Now, I had a subscriber ask me this morning wondering, well, look back at 2008, gold, silver, mining stocks, everything crashed. It doesn't matter. It was a crisis, and we saw the safe havens crash. And, a lot of that has to do with eventually once a financial crisis kicks into place and there's very strong selling and prices are dropping fast, that will pull pretty much everything down. And that is a concern, that if we actually have some type of serious financial crisis, I do feel like we're going to see gold and mining stocks get pulled down just like they did last time. So to me, it's I am bullish on metals and miners right now, but when a financial crisis starts to kick in, we will see metals and miners pick up speed to the upside and be the safe haven play. But there's a threshold there. When things get really bad and there becomes margin calls where investors all around the world are losing so much money in their stock investments that the brokers automatically start liquidating whatever they have to, and you have no choice of what they're going to liquidate, really. So eventually it creates selling pressure, uncontrollable waves of selling pressure on stocks and commodities, and we see everything crash together. So I think it's great to have a basket of everything. I like the precious metals sector going forward right now, but when we do get into a financial crisis, there's going to be a time when you almost want to step back and wait to see these margin calls, wait to see these sharp drops in the market, and that's when you actually want to almost take an inverse play. You want to profit from the falling market because stocks will probably see commodities, everything fall and collapse, and if you can catch that downdraft, phenomenal. If you just sit to the side and let the panic and everything unwind for 3, 4, 6 months, and when things start to look like they're starting to bottom, there's early signs, then you can move back into those and catch the next major leg up, when we could see gold explode in value in miners in another big way. But we could be seeing them at much lower prices than they are right now at the end of or halfway through the next financial crisis, which I think we could start to see a serious meltdown in the equities market. The second half of 2017, the whole Trump has kind of trumped the market. He's created this massive momentum, this huge flow of money, and this big shift. And a cycle move, a big shift this big, takes 6 months at least to start to kind of wind down and top out. So that's kind of where I think, looking forward this year, we're going to have to kind of fandangle the money between being long things and potentially using inverse funds or shorting the market during other times, and then getting back to the long side once the dust starts to settle.
You mentioned that money is rolling into safe havens. Where would that be?
Yeah, with the fear in the market from yesterday and today, we're seeing money flow into bonds. So we're seeing bonds have a nice move up today. We're seeing the utility sector, which I've been following very closely. It's been forming this really nice basing formation, this very similar to what it did in the December of 2015 or 2016, sorry, and or January, sorry. We're having a very similar setup to what we saw last January, almost the same price pattern, almost the same month, and we're seeing this money go into utilities. No matter what happens, people are going to need utilities. It's seen as the safe haven. asset class. Of course, it's interest rate sensitive as well, so if rates go up, we'll probably see, performance here as well. So going forward here, right now, the money is moving into utilities and even the staples sector. People are buying just staple stocks, companies that have what we need on a daily basis, which is very similar to like a utility type play. And of course, money is flowing into precious metals as well as a financial safe play. So there's this goes to show us, along with the VIX up almost 10% today, that it's just a simple shift of mindset today. People have gone from greedy last week, markets hitting all-time highs, to now people are ditching stocks and they're actually scared, and they're moving into the really dull kind of safe haven plays.
And it doesn't take long to change that mentality, does it?
It doesn't. Last week was everyone was super bullish, all excited about the Dow 20,000, and this week they're dumping everything, they're selling off, and in 3 days' time, the market could put in a big, washout low and have a big, strong close, and that sentiment just flips right back to carry on. We're going to new highs, and everybody's piling in and buying the markets up all the way to new highs again until it gets to the point where everybody's kind of done their buying and they're finished, and we kind of top out again. It's just the way the market goes. There's these short-term cycles that last 3 to 12 days, depending on the time frame and the type of investors that kind of move in waves. So,
is it getting harder to separate politics and economics?
You know what? I don't really follow the whole politics and economics so much, because I don't use any of that for any of my trading bases. I simply follow price and volume. It is kind of, from the outside view, it seems like there's just a lot of noise. You don't know kind of what's going on, what's moving what anymore. I've never paid really close attention to that side because, stocks will move months, sometimes a year in advance of what the financials, the fundamentals are doing. And stocks can continue to rally when they are making less profits per year. The earnings per share is out of whack. So I don't follow any of the whole fundamental, the economy stuff. The business cycle and the stock market cycle, they are out of sync. They track somewhat, but they're always out of sync dramatically, months, quarters, sometimes, a year out of whack. So don't use any of that really for trading.
What do you expect to see in crude?
Crude oil has been building that a very large basing formation and kind of flatlining here between that kind of 40 and that 50 area, $52 level, really since, June of last year. It's been oscillating and slowly making nominal new highs, but really it's kind of, the last couple months, it's been condensing and coiling, and it's building up pressure just like the stock market is. The question is, which way is it going to break? And it looks as though the momentum has shifted from a bear market to more of a bull market. It has just yet to really break out and have that first strong impulse wave to the upside, a strong breakout and rally. There's been a lot of accumulation, strong buying going on in crude oil futures. So, going forward here, I am bullish on crude oil. I think we're going to see it trading up at the $61 per barrel level, which is, $8 above where we are now at $53. And, right now it's just coiling. And the question is, are we going to break to the downside below the 51 mark and go down and test that 48, which is the 200-day moving average? It's a critical support level. That would cleanse the market with an ABC correction, which is actually very bullish. You want to cleanse the market. It reloads it for another run to new highs. That would be ideal. Or is it going to pop to nominal new high like we keep seeing here over the last couple months and grinding its way up a couple days, then pulling back, and then grinding up to, making a couple cents higher next week and then pulling back? It's kind of a painful, slow grind is what it's doing. And there's going to be some type of shakeup that cleanses it before I think it takes a big run.
Is it helpful that the Keystone XL pipeline has received presidential approval?
Yeah, I don't know exactly how that'll benefit crude oil so much, but it's probably going to play a good role. It's going to be, I think, good exposure for it. going forward. I think it'll get people focusing on the energy sector and getting excited. I think that's more along the lines of like, energy stock type of plays as opposed to a crude oil play.
Chris, thank you so much for talking with us.
Hey, always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen. His website is thegoldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.